common strategy is called trading around the VWAP. This is an alpha generating trading strategy. It's used primarily in stable markets when there's low volatility and low expected variance between the VWAP and the market price. We also use this when there's an expected narrow range and there's no fundamental news that's expected to affect the market. So in this environment with these 5 factors, we look to trade around the VWAP and attempt to capture alpha. Here's the dashboard for the alpha VWAP, and as we can see using the end of period data, we see the range between 29.82 and 30.15. We see the variance between the VWAP and the market price from a low of -13 to a high of +12. It's this stable range that we attempt to capture alpha. This is a relatively low risk environment where no major market moves are expected, and again, we just look to collect alpha by trading around the VWAP. Here's the market price in blue, the VWAP in red, and we can see the market price is expected to be stable, and we simply start to collect alpha, buying child orders below the VWAP and selling child orders above the VWAP in an attempt to capture intraday alpha. This is a stable environment. We don't expect any major market moves, and we enter bids and offers above and below the VWAP, again in an attempt to capture alpha. Here's the trade log, and as we see, we start off by trading relatively smaller quantities, beginning with 250,000 and then increasing the quantity to 500,000 and then 750,000 as we build up a cushion through midday and then early afternoon. And this is primarily based on decreasing time risk. We've got the greatest time risk early on, so we trade relatively smaller quantities. As we build up some cushion, we increase the quantity size in an attempt to further capture alpha in a stable environment. We've captured a total of 220 basis points in this environment on 1 million shares. That's over $2.2 million. So pretty strong incentive to capture alpha in a stable market environment. Thank you.